When it comes to indicators, only a handful of price action tools truly deliver valuable insights. The rest tend to serve as redundant confirmations. Which leads us to an important question. With all the progress in coding, is there an indicator that can automatically display smart money concepts on a chart? Well, there are a few options out there, but are they genuinely effective? Let's find out. Today, we're taking a look at a smart money trading indicator that many of you have been asking about. It automatically marks all these smart money concepts right on the chart. We'll go through each feature to determine whether an SMC indicator like this is genuinely beneficial or just another visually appealing tool that doesn't add much value. So, without wasting any time, let's dive in. Before we proceed, if you find this content useful, be sure to hit that like button. And if you're new to the channel, don't forget to subscribe and turn on the notifications so you'll never miss any of our latest uploads. I'll see you right after the intro and disclaimer. The indicator we're examining is known as the Price Action Toolkit, created by Flux Charts. Let's add it to the chart. I've disabled all its features for now so we can explore each concept step by step. The first concept it highlights on the chart is Fair Value Gaps, FVGs. So, let's enable the FVGs and click OK. As you can see, the indicator does a commendable job of marking the most recent fair value gaps without cluttering the chart. When we switch to another time frame, it automatically adjusts and identifies the fair value gaps for that specific time frame. There's also an additional setting that allows you to view higher time frame fair value gaps simultaneously. If I open the settings and scroll down to the time frame section, I can add another one and apply it to the chart. Now, we're on the 1-minute chart, yet I can still observe the 15-minute fair value gaps at the same time. I also noticed that within the settings panel, increasing the sensitivity helps eliminate smaller gaps and displays only the larger ones. Another option lets you choose whether to detect FVGs formed by candles of the same color or by mixed colors. If you select Same Color, it filters out the FVGs created by mixed candles, which can be useful during backtesting. Overall, the indicator performs reliably when it comes to automatically identifying fair value gaps on the chart. Now, let's move on to the next concept. Inversion fair value gaps. If you're not familiar with inversion fair value gaps, they occur when a fair value gap fails and gets completely filled. At that point, the previous support becomes resistance, and if price retraces back into this zone, it becomes another key trading area for potential short positions. By enabling inversion fair value gaps on the chart, we can see that the indicator also effectively identifies these critical zones. Likewise, when we change the time frame, the most recent inversion FVGs are updated and visible on the chart. Next, we have order blocks. Let's check that option and see how they appear on the chart. Now, we can see several order blocks displayed. From observation, it seems the indicator identifies the last bearish candle before a bullish impulsive move as an order block, and conversely, the last bullish candle before a bearish impulsive move. However, with this definition, several potential order blocks are filtered out and not displayed on the chart. The highlighted zones are known as POIs, points of interest, specific price areas on a chart where market reactions are likely to take place. So, essentially, when price revisits these order blocks, we anticipate a potential rejection and prepare to take a trade. The indicator applies a distinctive approach to detecting order blocks, showcasing only those validated by market structure and trading volume. However, determining their success rate would require thorough backtesting. Additionally, we still need to identify the exact entry trigger and confirmation signals on the lower time frames. Speaking of backtesting, there's another tool by Flux Charts that can assist with this: price action automation. For instance, if we wanted to automatically backtest a basic fair value gap entry, we'd simply define the backtesting duration and adjust the FVG parameters for a long trade setup. Next up, we have breaker blocks. So, what exactly is a breaker block? A breaker block refers to a previous order block that failed to reject price movement. In this case, support turns into resistance or resistance flips into support, forming a new point of interest. When the price taps into a breaker block, we anticipate a reaction in the opposite direction, typically confirming a continuation of the new trend. Returning to the chart, we can see that the indicator highlights these invalidated order blocks as breaker block zones. This feature helps traders spot areas where a shift in market structure has occurred. Similar to order blocks, evaluating the performance or accuracy of breaker blocks also demands extensive backtesting. While these zones may not always trigger a reaction, when they do, they often offer high probability trade setups. Next, we move on to liquidity grabs. Once you enable this feature on the chart, you'll notice red and green circles appearing. These represent bearish and bullish liquidity grabs, respectively. When price wicks above a prior swing high, the indicator recognizes it as a bearish liquidity grab, suggesting a possible move downward. Likewise, when price wicks below a previous swing low, it's identified as a bullish liquidity grab, signaling a potential move upward. Liquidity grabs pinpoint areas where the market sweeps stop losses before reversing direction. These zones can serve as powerful signals for smart money entries, especially when used alongside other market structure concepts. Now, let me show you exactly how that works. Hey traders, you've been asking for it, and it's finally here. The 2-month SMC Trading Mastery course drops this November 1st. This isn't just another course, it's a complete system to master smart money concepts. Manage risk like a pro, and build consistency in your trades. And here's the crazy part. It's only $500, plus 61% off for pre-bookings before November 1st. Oh, and we're giving away 5 $100,000 funded accounts to our students. Don't wait, click the link, secure your spot, and let's make this the turning point in your trading journey. See you inside. In this example, the most recent market structure clearly indicates an uptrend. Therefore, we're only focusing on potential buy opportunities. However, entering the market at the current price isn't ideal since it's too high and could correct at any time. What we need is a pullback or retracement to enter at a more favorable price. So, where might our point of interest be? This red candle before the strong bullish impulsive move outlines our trading range and serves as a possible order block. If price retraces into this area, it could offer a high probability long setup. Still, it's important to note that a reversal from this exact level isn't guaranteed. Also, because many traders might have identified the same zone as a poi, the chances of manipulation or a liquidity sweep increase. So, how should we approach this situation? First, wait for the price to return to the zone. Then, move down to a lower time frame to look for confirmation. On the lower time frame, we can observe that price rejected this zone by forming a double bottom reversal pattern, meaning it attempted to break below twice but failed both times. This shows bearish weakness and often signals traders to go long. As more traders enter long positions, liquidity accumulates below the equal lows of the double bottom. As smart money traders, we anticipate that price may wick below this level, triggering stop losses and collecting liquidity before swiftly reversing back into the range. This liquidity grab, when combined with confirmations from order blocks, market structure, and other SMC tools, often marks the beginning of a strong bullish move. Now, one key point about the liquidity grab feature is that Flux Charts has made it available for free. To access it, open the Indicators tab on TradingView, type liquidity grabs, and select the one published by Flux Charts. This gives you access to the same liquidity grab tool used in the Price Action Toolkit, allowing you to test its signals directly on your own charts at no cost. Now, let's move to the next concept, market structure. Let's apply the break of structure, BOSS, and change of character, CHOCH, tools. If you're familiar with market structure principles, you know that in a bullish market, when price breaks a previous swing high to the upside, it's referred to as a break of structure, confirming trend continuation. Conversely, a change of character happens when price breaks a previous swing low to the downside, signaling a potential reversal. If price fails to form a new high before a CHOCH occurs, it indicates momentum loss. This scenario is identified as change of character plus on the indicator. When you apply these concepts to the chart, the indicator automatically displays breaks and changes. You may notice that the default settings mark them slightly differently from how you'd plot them manually. However, by adjusting the swing length parameter, you can align the indicator's output more closely with your manual analysis. Next, we have equal highs and equal lows. These levels are crucial to mark because they often attract manipulation and liquidity sweeps. As many traders monitor these areas, The indicator performs well in automatically detecting and marking equal highs and lows on the chart. By increasing the ATR multiplier in the settings, the indicator can identify more equal highs and lows by accounting for greater variations in price swings. And the features don't stop there. Overall, this indicator does an impressive job of automatically mapping out smart money concepts on the chart, far better than most other indicators I've tested. That's it, traders. Thanks for watching this video. So, traders, I hope you found today's video helpful. If you did, don't forget to hit that like button, and I'll catch you in the next episode.